Under Scope Ratings mid-year 2025 economic outlook, we see medium-run risks for the global economy and for global credit remaining skewed on the downside presently. We outline several core themes on this slide. Firstly, tariff, geopolitical, and sovereign debt risks remain central. The on again, off again trade tariffs of the US president and associated heightened economic uncertainties, and increasingly multipolar globe, resulting in greater geopolitical risk, stretching from tensions in Eastern Europe to the Middle East, alongside higher global sovereign debt, spearheaded by the increasing debt of the United States and China, continue to drive economic and financial market uncertainties. Secondly, global slowdown is foreseen near term. Thirdly, financial markets stay volatile as President Donald Trump balances his pro-market instincts against trade policy announcements and challenges to the independence of the Federal Reserve that test market stability. Fourthly, inflation is a continued theme globally, even as risks from inflation for the euro area have become more balanced recently. This underscores the longer-standing theme of so-called higher steady-state rates, as official rates and long-end borrowing rates remain above the pandemic crisis and pre-pandemic levels, even after rate cut cycles conclude. Finally, labor markets in advanced economies are seen staying comparatively strong.
At the midpoint of the year, we have revised our global growth forecast downward to 3% for 2025, as shown by the orange line in the chart. This marks a reduction of 0.4 percentage points from our earlier projection and a slowdown from the 3.3% global growth recorded in 2024. For next year, we have a moderate forecast of 3.1% growth for the global economy. The primary driver for this year's softer global growth is the slowing down of the US economy, illustrated by the green bars, where we have revised growth down to 1.8% for this year. This revision reflects the impact of newly imposed tariff barriers and sharp government cuts of the Department for Government Efficiency. For 2026, we expect US growth to remain at 1.8%. We have slightly raised our growth forecast for the Chinese economy, the world's largest by purchasing power parity, to 4.8% this year, as shown by the yellow bars. This outlook is supported by the government's ambitious 5% growth target for 2025 and a temporary easing in the US-China trade tensions. Euro area growth, represented by the blue bars, is expected to remain moderate and uneven. Peripheral economies are set to outperform core countries such as Germany and France. Looking ahead to next year, we anticipate stronger growth across Europe, driven by increased defense spending and the rollout of investment initiatives. Most scope credit sector outlooks at the midpoint of 2025 remain balanced, recognizing both the upside and downside risks for the rated sectors.